Hey there, Money Mavericks. It's your friendly neighborhood Money Maven here. Markets fell today. I tried to calculate how much, but this is all I could come up with. If you know, you know. So we had big momentum, but today we hit a wall. Don't worry though, I'll make sure your brain still gets a workout, even if your portfolio took a nap. Strap in. Let's start with the big picture. The S&P 500 slipped about 0.5%. The Dow Jones fell roughly 0.7%, and the Nasdaq gave up about 0.9%. In short, the winning streak decided to hit pause. Like you planned a sprint workout and your legs said, nah, we'll do Netflix instead. Why the pullback? A few reasons. A weaker than expected number from Netflix weighed on investor sentiment. More on that in a second. Yields on the 10-year Treasury remained under 4%, and that mixed message has traders scratching their head. Also, the looming federal shutdown drama in Washington is acting like a slow drip of uncertainty. So sorry, bulls, your tape isn't showing highlights today. Let's zoom in on Netflix, because if your streaming service can't stream you some gains, well, that's awkward. Netflix posted record revenue, about $11.5 billion in Q3, up roughly 17% year over year. But, and you always know there's a but, a surprise tax bill of about $619 million from a dispute in Brazil knocked its net income down and spooked the market. Even with the ad tier ramping up, the message became, great growth, but watch out for hidden costs. Shares dropped roughly 10% on the news. Netflix, getting you to pay more, but someone else still got the bill. Here's the deeper point. Good growth isn't enough if surprise expenses sneak in. And for investors, that means a narrower margin for error. Netflix may be sexy in content, but today the financials pulled a faceplant. Also, it's a reminder that even companies dominating user behavior can trip over tax policy, regulation, or hidden liabilities. So yes, you can love the product and still hate the stock. If Netflix keeps this up, I'm going back to piracy. Legally. I mean metaphorically. Now, let's talk about the corporate battleground where winners and we'll see you later types are emerging. First up, Intuitive Surgical. Robots in operating rooms rocked it. Strong demand for surgical robots, margin upside, and raised guidance. In a world where even my plants are shrinking from drought, this one grew. Robots are literally outperforming surgeons and my portfolio. Beep boop, pay me in stonks. Then we have IBM. They beat on revenue and EPS, but the growth in their cloud and AI businesses disappointed the party. So the market gave a nice try face. And lastly, semis and hardware broadly are still limping. Even if the story is still AI everywhere, companies like Texas Instruments aren't out of the woods yet. Investors want fireworks and didn't get quite enough. Okay, so now oil. Because yes, we still care about black gold. It's shiny, it's dirty, and we love to talk about it. Crude oil rose more than 1% today, helped by supply risk whispers and hopes for cooling trade tensions between the US and China. The move isn't huge, but in a market that's been playing steady, it's a flicker worth noting. For those of you chasing energy plays, be picky. The rebound is modest. It's the sort of move where you go, ooh, maybe, not holy cow, Lamborghini probable. Yet. And yes, crypto makes an appearance, because where else do chaos and hope hold hands? Big money is flowing into spot crypto ETFs, both Bitcoin and Ethereum, and the large asset managers are filing for new multi-crypto products. The message, we're in, let's see what happens. But here's the fine print. In risk-off days, like today, crypto doesn't always sparkle. If markets are hitting the brakes, risk assets often feel the squeeze first. So, if you're in crypto, stay alert. Consider it the roller coaster in the back of the finance fair. Fun, but hold on. All right, enough foreplay. Let's get to the quickies. I mean quick hits. Fast money time. Yields are flirting just below 4%, which is Wall Street's way of saying, we're calm. For now. Powell's recent comments about focusing on jobs over inflation gave traders hope that rate cuts aren't totally off the table. But when yields hang out this low, it's less romantic tension and more existential dread. Washington's still pretending it's an episode of The West Wing, except everyone forgot their lines. The longer this drags on, the more it screws with economic data releases and investor confidence. So yeah, the government's closed, but the drama, always open. Beyond Meat soared over 100% this week, then immediately face-planted like it realized plant protein doesn't pay the bills. This thing's been pumped, dumped, and memeified harder than my dating life. It's not investing at this point, it's cardio. Gold slipped a bit after a strong run, because even shiny things need a nap. Traders are taking profits while waiting to see if the Fed blinks or yawns next. It's still up big on the year though, so don't feel bad if your jewelry's outperforming your portfolio. Jobless claims and home sales data drop tomorrow, which means pre-market traders will be holding their breath and their coffee. Any surprise jump could shake up rates or send tech stocks doing interpretive dance moves. So yeah, tomorrow's morning vibe, caffeine, charts, and chaos. Biotech startup MapLight Therapeutics is prepping to go public because nothing says trust me like launching during market mood swings. The IPO windows cracked open again and everyone's peeking through like it's the fridge at midnight. We're not in 2021 territory yet, but at least the corpse twitched. US-China trade talk headlines are back because apparently we can't have nice things. Any new restriction or tariff rumor sends tech stocks spiraling faster than my mood on earnings day. At this point, de-risking sounds more like re-risking with extra steps. If you understood half of that, congrats. You're now officially overqualified to work at the Fed. Remember, the market doesn't sleep. It just doom scrolls at 3 a.m., like the rest of us. Up next, we wrap it all up before the market opens again and ruins this whole segment. So that's it for tonight. The market got a little moody, streaming got tax punched, robots soared, oil gently reminded us it's still there, and crypto waved hello from the sidelines. If your portfolio felt the tingle today, don't panic. Just don't try to do a backflip either. Baby steps. Click subscribe, hit the bell, and I'll catch you next time, where we'll keep making sense of the money world so you don't have to drink all the Kool-Aid yourself. Stay curious, stay sassy, and most importantly, stay invested, but maybe not in Beyond Meat. Good night. What the hell is a tax punch? Well, I guess I get used to that if it means millions of dollars.